Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a mixed start as concerns over global growth and trade tensions keep markets in a range. Prime Minister Narendra Modi, along with his Union Council of Ministers, will be sworn in today at the Rashtrapati Bhavan at 7 p.m. High production costs are likely to weigh on Coal India's operational performance in the fourth quarter. Low fuel prices and lower sales are likely to impact ONGC's March quarter performance. And 10 teams will battle it out for cricket's most prestigious prize. The ICC Cricket World Cup begins in England and Wales later today. Let's begin with the action on Wall Street, where stocks fell to a 12-week low. The S&P 500 closed at its lowest level since March 11th, while the Treasury yield, which has been in focus of late, fell to the lowest since September 2017. Renita Young of Bloomberg News tells you all about that session in this report.
U.S. stocks ended at a 12-week low on Wednesday after the S&P 500 dipped below that 200-day moving average briefly, but closed just below the 100-day moving average. But the risk sentiment really set in overnight after Chinese media reported that Beijing may cut exports of rare earth minerals that are used in the defense and energy sectors. Now, no surprise there that it opens a new front to the U.S.-China trade war. But other things did roil markets on Wednesday, and that came in the form of U.S. Treasuries, which resumed a rally that really did send a key slice of the yield curve into its deepest inversion since 2007. And we saw the U.S. 3-month and 10-year Treasuries see a gap that was sliding to its lowest since 2007, and this is often watched as a gauge of economic recession. So it's no surprise that investors really bought into gold on Wednesday, as it's seen as a hedge against geopolitical risk and uncertainty. But we do have more U.S. data coming out this week, including first quarter revised GDP figures that should give a more rounded out view of how the U.S. economy is faring in this moment. Meanwhile, we're still in corporate earnings season for retailers, and Wednesday was not the best day for retailers. We saw Abercrombie and Fitch and Canada Goose Holdings shares sliding after both companies missed their analyst estimates. Now, Dick's Sporting Goods actually beat its highest analyst estimate. However, those shares slid most likely in sympathy with other retailers, and the draw out from retail sectors were so bad on Wednesday that it sent the S&P 1500 Consumer Discretionary Index to its lowest since March. So that's a big picture of it. And there are more retailers reporting this week. Coming after market will be PVH Corp, which owns Calvin Klein and Tommy Hilfiger. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's now take a look at what the Asian markets are up to this morning. Rosalind Chin is joining us live from the Bloomberg studio in Hong Kong. Rosalind, the first a couple of hours are done. How are we looking at the start of China trade?
Well, Chinese markets are lower actually today. We've got the Shanghai Composite losing about just under 0.5%, and the CSI 300 a little over 0.5%. Largely speaking, generally the region is looking a bit gloomy today. We've got the MSCI Asia Pacific losing just a little bit, down 0.16% right now. Of course, Japan also falling down by 0.5%. The Nikkei, that is, and the Topix losing 0.6% right now. Extending gains, the MSCI extending gains for a second day there as well. Now, if we want to look at the Kospi, though, because that index actually is making gains amongst all the others which are losing, and that is up by more than 1/3 right now. Samsung leading those shares higher there. We also do see some movement elsewhere, though, because there are stocks of Korean cosmetics, which are generally quite popular with investors, falling after the Chosun Ilbol, which is one of the publications there, reports that the U.S. asked South Korea to officially deploy a missile shield system, which has been now launched, which launched temporarily. So there's a bit of movement there, and those, of course, related to relationships with China as well, which, of course, has been in the past has been very much against the deployment of this missile shield system, THAAD. Elsewhere in the region, we're looking at Australia now. That the S&P ASX 200 index now losing nearly 0.6%. We've got Linus. We're still tracking that, the rare earth miner, the biggest one outside of China, and that is making gains of just over 3% now. But earlier in the session, it had actually jumped at the open about 10%, much higher. It's now given back some of those gains, but still doing particularly well, extending gains, of course. And it has been benefiting off this news that China might take advantage of its dominance in rare earths to sort of hit back at in the US-China trade war. And also one other stock we're looking at around the region, it's affected slightly by this, or rather a fair bit amount by this trade war as well, is SoftBank. Now, right now that stock is falling 1.3%, nearly 1.4%. It has decided that it's not going to use Huawei technology for its 5G systems. It's going to use Nokia and Ericsson instead, and that, of course, probably a result of the ongoing issues with the US and China in this trade war that's going on. Back to you.
Thanks so much for that, Rosalind. Bonds have been in focus, and bond bulls are a happy lot apparently these days. The US yield curve inversion extended last night, with benchmark treasury yields falling to their lowest level since September 2017. The Japanese government bond yield also slipped into negative territory, while the New Zealand 10-year rate is at a record low. Kathleen Hayes of Bloomberg News sums up all the action in the bond markets in this report.
Let's set the stage, because the bond rally, which we were talking about 24 hours ago, in a sense, David, we could just, do a rerun of all the things that are driving it and what has gotten the bond bulls so excited right now. Picking up steam, of course, as China overnight talked about rare earths. They own 80% of the world's supply. If they use that as a weapon in the trade war, that could be very tough for the United States and other countries as well. All of this helping, again, to move the 10-year Treasury yield down to about 2.2%. That's almost 50 basis points lower than it was at the beginning of the year. And yes, it did deepen the curve inversion. Let's look at the 3-month bill to the 10-year note. And what you'll see is 2 red bars in the middle of the chart that's coming up. And what those red bars are is recession. And what happens when the yield curve inverts, when it goes those 2 little red spots in the middle, well, the curve inverted, you had a recession. Now the curve is barely inverted, but it's a little more inverted than it was yesterday. This is what people are concerned about. I think one of the things so interesting about what James Gorman said, he's worried. He sees all the risks and the threats, but he does see a resolution of the trade war because there's too much at stake for both sides. And even though he sees the caution, he's not really calling for a recession. Here's what he said, though, about all the sentiment surrounding the yield curve inversion.
It's concerning. I mean, it shows, look at what the 10 years in Germany did. I mean, it shows just how anxious the markets are, and there's more news to be anxious about than there is to be positive about.
So I think James Gorman understands what bond traders are seeing. He says, you know what, the bond market can be wrong in the short run, wrong in the medium term. In the long run, it's always right, but it's too soon to see if that's where the bond market is just yet.
Now, James Gorman, who is Morgan Stanley chairman and CEO, he also spoke to Bloomberg's Tom McKenzie about concerns surrounding the trade war, where he said that he doesn't see the trade tensions escalate into an all-out trade war as there's too much self-interest at stake. Here's what he said.
The U.S. economy is a $19 trillion economy. China is about a $12 trillion economy in terms of nominal GDP against a world economy of 70. So 40% of the world's GDP is tied up in these two countries. To have a major trade war would be very bad for both countries. Everybody understands that, I think. I certainly hope that they do. Certainly U.S. CEOs that I talk to understand it. Chinese CEOs I talk to understand it. So, what we've got is there's a resetting of this relationship, which makes sense. After 30 years of incredible economic growth in China, there needs to be a resetting. There are certain things on the trade side that need to be addressed, are being addressed. Do I think this is going to devolve into, as a betting man, into a full trade war? No, I don't. because there's too much self-interest in keeping this thing on the rails. The question is, some people have said to me, if it doesn't happen by the G20, which I think is late June, we have a problem. I'm not sure about the exact timing of when we need some form of resolution, but clearly the negotiators need to come to the table and figure this out. Not everything. That will take decades to get done, but we need to get the train back on the tracks.
What are the global economic implications if we do get a full-blown trade war, as in Trump pulls the trigger on an additional 25% tariffs on those $300 billion worth of Chinese goods?
Well, I think, frankly, a lot of that is priced in. I mean, what you said about, where the 10-year is right now, what you said where the S&P has been moving. Unfortunately, it's not in isolation. We've got Brexit going on in the background. There are other things, political environment, the elections coming up. So there's a lot of macro noise right now. I can't predict exactly what will happen if that 250 billion tariff number kicks in. But the bottom line is the two largest economies in the world do not serve themselves well by engaging in a full-blown trade war. The US runs a surplus in services. China runs a surplus in goods. There needs to be more adjustment, more transparency, particularly about technology transfer, and we need to get this thing back on the tracks.
If only it was as simple as that. Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Agam, but how are we looking today? It's expiry, and there are a lot of other things happening. Cricket, of course, is not something that will affect markets, but
sure. Yeah, well, it's no less of an economic event as well, at least as far as India is concerned. But yes, at least in Indian markets right now, we're looking at the SGX Nifty, which is flat, and we did see movements in the benchmarks yesterday. There really wasn't too much to go for. We did see 0.5% cuts coming through. Mid-cap and small-cap indices also falling in line, and the banking indices, looking at severe cuts, especially as far as the PSU banking index is concerned. But moving on to your ADRs, more weakness in ICICI Bank and Dr. Reddy's. Among the other set of ADRs, you have marginal gains for Vedanta and Wipro advancing by around 1.4%. But as far as your FI flows going up, this is where things have started to taper. It's the relative lack of activity from institutions in general, and as you can see, not much to speak for. These are unremarkable numbers when compared to what we have been used to over the past few weeks. Moving on to your contribution, again, we did see pressure from financials like ICICI Bank, State Bank of India, Reliance Industries, as well as Larsen & Toubro. And moving on, we also have a few futures expiry, as Alex suggested. 47%, not the best of the sets. We are used to perhaps a slightly higher number, if not, at least as was 48% for the Nifty, and the Bank Nifty seen again 47%. These numbers are likely to pick up. Do remember that the average has come off quite substantially because of the previous expiry didn't see as many rollovers because of uncertainty. Now, again, 12,000 mark is the only one that stands out as far as your open interest distribution is concerned. And in terms of changes, that is what we saw, writing around the 12,000 mark. Traders finally taking the last few bits of that premium and trying to eat it. India VIX, of course, moved up at around 3%, but that was largely on account of the market's coming off, and that's not too surprising. A neutral level of Nifty put call ratio around 1.15. And moving on, as far as stocks in F&O ban go, Adani Power is in the F&O ban, and we have PC Jeweler, which moves out of the F&O ban. Watch out for this one. It's a severe discount to the spot price for the May futures as well as the June futures. HCL Technologies, Glenfarc Pharma, as well as Larsen & Toubro all seeing surge in OI with a little bit of decline though. And IGL and Strides Chasanen as well as Repco Home Finance also looking at some amount of traction. But Alex, it's just going to be like that. Consolidation on the benchmarks and stock-specific movements.
All right. Thanks so much for that, Agam. Well, let's take a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
President Trump, who has tweeted case closed after special counsel Robert Mueller spoke publicly for the first time about the Russia investigation. Mueller repeated his report, finding that he couldn't reach a conclusion on whether President Trump had obstructed justice. He also said there was insufficient evidence to charge a broader conspiracy.
forth in the report after that investigation, if we had had confidence that the president clearly did not commit a crime, we would have said so. We did not, however, make a determination as to whether the president did commit a crime.
To Israel now, the country will hold a new election after Prime Minister Benjamin Netanyahu failed to form a government by a midnight deadline. It is the first time an Israeli Prime Minister designate has been unable to put together a ruling coalition after an election. The 6-week deadline expired with two of his Likud party's potential partners unable to agree on a proposed military draft law. SoftBank's Japanese telecom unit, meanwhile, has selected Nokia and Ericsson as vendors for its next-generation wireless network, excluding longtime supplier Huawei. The Trump administration has been urging allies to ban the Chinese company, citing security risks. Japan has not made an official decision on Huawei, but local media say its top carriers, NTT Docomo, SoftBank Corp., and KDDI will shun Huawei and ZTE. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, Coal India will report its fourth quarter numbers today. Lower coal prices and higher cost of production are expected to weigh down the company's operational performance. Nikki Mirchandani breaks it down for us in this report.
We're not expecting typically a good quarter coming in from Coal India. If you look at the operational performance, we're expecting a downtick coming in on account of higher cost of production. But then the top line numbers first, we're expecting a flattish growth out of the company on a consolidated basis. The number that we're working with is around 27,200 crore. This compares to nearly 26,900 crore that we've seen in the corresponding quarter. Profitability of the company is seen higher by as much as about 4,900 crore, compares to around 1,290 crore in the corresponding quarter. Adjusted EBITDA, that number is seen down by as much as 29% in this quarter. Margins are expected to shrink to as much as 26% as compared to 37% in the corresponding quarter. A few other parameters that we'd like to keep an eye out from the result will be the total volume uptick, which is expected to be in the range of around 5%. FSA volumes are expected to increase by 12% year-on-year basis, and e-auction volumes too are expected. They're actually expected to go down by as much as 24%. But if you look at the realization, the trend is going to be completely different, because FSA realization is expected to decline by 1%, but that of e-auction, despite the dismal volume growth, is expected to increase by 24%. What goes behind the making of these numbers, as I just mentioned, higher cost of production is expected to weigh down on the operational performance of the company. Strong power sector demand is expected to keep the FSA volumes, but it's the e-auction prices of coal which is expected to aid the realization, the e-auction realizations for Coal India. Overall, what we'd like to watch out apart from these numbers will be the commentary coming in on the Coal India demand outlook and prices, if at all.
All right. The other big earnings, of course, is ONGC. Oil and gas manufacturer ONGC will also be reporting its fourth quarter numbers today. Lower oil prices and lower sales are likely to have a negative effect on the company's financials. Somit Sarkar is here to tell you all about the key numbers to watch out for. Morning, Somit. Over to you.
Good morning, Alex. Now, for the standalone, on a standalone basis compared to last quarter, if you see for ONGC, the revenues are expected to be low by nearly 9% to close to 25,200 crore rupees. The company's EBITDA is expected to decline by nearly 17% to close to 14,000 crore rupees. Margins are expected to come in at close to 54.9%, while the net profit is expected to decline by nearly 13% to close to 6,500 crore rupees. And a net realization number that is also expected to be lower at $64 per barrel, and that is because the Brent crude averaged lower in the fourth quarter of financial year 2019. It is expected to be a sequentially weak quarter due to lower oil prices and lower sales volume. Also, lower other income and high cost would weigh on its bottom line in the fourth quarter of financial year 2019. Now, oil prices were lower in the fourth quarter, because of which the revenues are expected to be lower. Along with that, the crude oil and gas production and also the sales are expected to be lower compared to last quarter. Now, the crude and gas production numbers are expected to be lower by nearly 1 to 2%, while the sales number are expected to be lower in the range of 1 to 4% compared to last quarter. However, the interest cost of the company in the fourth quarter could be lower because the company has been repaying its debt. Lastly, all these numbers are deemed on the fact that there's no subsidy burden that the company has to bear in the fourth quarter of financial year 2019. If at all the company has to bear a subsidy burden, and it would be for the first time since second quarter of financial year 2016 that ONGC would be asked to bear a subsidy burden. Lastly, key things to watch out for from the earnings would be clarity on the subsidy burden. Secondly, oil and gas production numbers along with our development plans for the KG Basin, the capital expenditure guidance, and any updates on the debt repayment would be important to watch out for from ONGC earnings today.
All right, Somit, you're going to be back definitely to tell people about the ONGC results, but there are also several other stocks that you've got on a list today, the stocks in news. What do you have for us?
Firstly, it is International Paper, where the promoter group has entered into an agreement with West Coast Paper Mills to sell its controlling stake. Now, they will be selling, the West Coast Paper Mills will be acquiring anything between 51 to 60% from International Paper, which owns nearly 75% stake in the company. Now, because of this, there will be an open offer for the public shareholders, and the price for that has been set at around 450.63 rupees per share. Secondly, we have Navbharat Ventures, which has come out with its earnings. Now, the numbers were not that good, because if you see the company's revenue were lower by nearly 13%, while its EBITDA was down by nearly 26%. A weak performance from power, sugar and mining segment weighed on its performance in the fourth quarter of financial year 2019. However, the company did announce a buyback of 15.6 lakh shares at 160 rupees per share, which is at a premium of nearly 50% to the current market price. So that was one thing positive coming out from Navbharat Ventures. Secondly, we have Power Grid Corporation, where the company reported an inline set of numbers. The revenues were higher by nearly 18%, while the EBITDA jumped nearly 19%. Margins expanded to 84.5% in the fourth quarter. Thirdly, we have Adani Power, where the numbers were pretty much weak. The revenues were low by nearly 69%, while the EBITDA declined by 51% compared to last year. We also have Excel Cropca, which reported a good set of numbers. Revenues were higher by nearly 32%. EBITDA jumped nearly 2 times to close to 12 crore rupees. Now, changes in inventory mainly led to the stellar operations of Excel Cropca in the fourth quarter of financial year 2019. Lastly, we have United Spirits, which reported a decent set of, which reported a bad set of numbers. Now, the revenues were up by nearly 4%, but the EBITDA of the company declined by nearly 3%. Margins also remains largely stable at close to 12.6%.
Thanks so much for that, Somit. Well, Prime Minister Modi and his cabinet colleagues will take oath at the Rashtrapati Bhavan in the evening today. The President will administer the oath in the presence of various chief ministers and leaders of the BIMSTEC member nations, which include countries like Sri Lanka, Nepal, Bangladesh, Bhutan, Thailand and Myanmar. The ministerial allocations will be made official only after the swearing-in ceremony is over by the President's office or on advice of the Prime Minister. While a large number of sitting ministers are likely to make it back to the cabinet, Finance Minister Arun Jaitley has chosen to opt out, citing ill health. Narendra Modi has called on Jaitley last evening, some suggesting to try and convince him to reconsider his decision. His successor, remember, will have to present a budget within a couple of months, as the last one was just an interim budget. Well, you've probably been waiting for this for quite a while. Cricket's most prestigious prize, the ICC Cricket World Cup, begins in England and Wales today. The first match of the 12th edition will see hosts England lock horns with South Africa at the Oval today. England is expected to go into the tournament as favourites, being the #1 ranked ODI side. Now, having been part of the World Cup finals in 3 editions before, England have never managed to lay their hands on the coveted trophy. The tournament will have 10 teams, the lowest in recent times, as associate nations have not been made part of the tournament this time around. The teams will battle it out in a round-robin format instead of being divided into groups, a format last seen in the 1992 edition.
The television advertisement rates for the ICC Cricket World Cup 2019 have jumped to their highest, beating what Star India charged for the latest Indian Premier League. The ad rates for India game range from rupees 15 to 16 lakhs for 10 seconds, and the much-awaited India-Pakistan match will be played on the 16th of June. A 10-second slot will cost rupees 20 lakhs. Now, that's the highest for a cricket game according to media buying agencies, beating IPL ad rates of 10 to 12 lakhs for a 10-second spot. Now, Star India declined to comment on advertising rates. Now, one of the main reasons advertising rates have gone up is because this year it is held in England, due to which the matches will be telecasted live from 3:30 p.m. onwards and will go into prime time, while the previous World Cup, which was held in Australia, matches were telecasted as early as 3:30 to 6:30 a.m. Now, India's largest sport and entertainment broadcaster already has 24 advertisers on board, including PhonePe, Amazon Pay, Bear Juice, Uber and Coca-Cola. Now, the World Cup will also have no group, and all 10 teams will play against each other as a round-robin league format makes a return after 27 years. Now, if advertisers have opted to buy ad spaces in bulk, a package was sold for rupees 7 crores for 25 matches, sources say. Now, that 80% of the inventory for India matches have already been sold out, and 70% of the inventory of non-India matches have already been sold out, according to sources.
All right, here in the newsroom, at least one television is going to be on the World Cup at all times. Tell us what you think. In the meanwhile, let me tell you a couple of stories that are on the website that you should consider reading. The National Company Law Appellate Tribunal has asked the IL&FS Group to consider getting more of its subsidiaries to service debt obligations. The group will have to inform the court of its decision by the 12th of July. Currently, IL&FS companies are divided into 3 categories: red, amber and green. Red companies can't repay debt at all, amber companies can service operational debt obligations, and green companies can function normally. The appellate tribunal indicated that in the event of a failure by IL&FS to promote companies to the green group, amber companies will be allowed to proportionately service debt obligations. And the government is examining whether the promoters of Jet Airways are involved in financial irregularities similar to the charges brought against Vijay Mallya when he was at the helm of the now defunct Kingfisher Airlines. All right, that's all you need to know going into trade today. Do stay tuned, though. There's a lot happening today, not least of which is expiry. So stay tuned. This is Bloomberg Quint.